Well, good morning and welcome to the Market Carver. Happy Thursday. Hope you've had an outstanding week thus far and a great weekend coming forward. Lots of economic stuff that's coming out, even though we have very, very low volume in the market. That means there's not a lot of people that are making a lot of activity this month. It's typical. It's vacation, back to school, those kind of things, a little bit of heat, especially out west. So that's not that important. What is going to be important is a few weeks from now with Jackson Hole and the Fed speak that's going to take place out there. Remember, Bernanke's not even going to attend, had a scheduling conflict, so it's going to be interesting to see what Janet Yellen has to say and a few other things that are going to go down there. We will be very closely watching that as we progress and pay attention to the things that are changing inside of the market. But many things are going on that are worthy of conversation. We'll go ahead and start with the fundamental leg first. You probably saw the GDP numbers or heard about it. They were making fun of it on the nightly news. The GDP was revised all the way back to 1929 to be more reflective of international standards. Now, they went back to 1929 not to cook the book, so to speak, but so that we would have an apples-to-apples comparison. What was far more important was the 5-year revision that came, and we've been talking about this for a while. John Herman, one of the economists we work with, started screaming from the rooftops in July that there was a good chance that we missed the jobs numbers by as many as 730,000 that were new jobs created in 2012. The revision shows closer to 900,000. That's the good news. The economy is stronger than most of us believed. The bad news, on the other hand, is many of those jobs were still part-time as to avoid Obamacare and not be caught where they have to finance the insurance costs. Interesting thing, important to watch, the economy does look like it was much stronger than what people thought. Now the question is, does it go to the technical leg? Does it relate to this market? When you look the very bottom, you're going to see China down at the bottom struggling massively. We'll get to that in a little bit. I think this could be a buying opportunity coming up shortly. But the rest of the world is really packed together right there in the middle. Not a lot of movement. It's the U.S. market that's been the rock star. And anything that you've done to diversify other than be in the U.S. market has literally cost you money. Bonds are actually still negative. That's an important part of the market in understanding where we are, the things that are going on. Diversification is important. You've got to do it. And at the same time, anything you've done to diversify away from the U.S. market has been costly. Now the question is, where do we go from here? Remember, as risk managers, we have to manage not for what happened, but for all the things that could have happened. And that is critical when we live in the volatile world that we live in and the times that we live in. This is an interesting thing. We don't talk about high-frequency trading very much, but just to give you an idea of what's going on, the servers for the NASDAQ and the Chicago Board of Exchange, literally from Chicago to New Jersey, they're getting ready to rewire the high-frequency trading so that because the curvature of the Earth requires a longer signal. It already moves at the speed of light. Now, I thought that was as fast as you could go. Well, apparently not. If you raise it higher, you make it a little bit shorter. And they're going to go to this extent, wait for it, to save a whopping 4 milliseconds. 4 milliseconds. That's how quick some of this stuff trades. That's an interesting conversation at the coffee machine. Doesn't matter one iota to us or hills of beans. But when people say that high-frequency trading is dying, that wouldn't be the case if they were going to spend that kind of money simply on a cable. PMI, the Purchasing Manufacturers Index, came out. Anything above 50 is positive. For China, it was 50.3 expected, came in at 50.7. Now again, remember with the market, it's all about the trajectory of the growth. And that is positive trajectory. Good stuff. Everybody thought it actually had contracted to a degree. America came in at 51. Actually, it came in at 53. It was supposed to be around 51. Much better improvement than we thought. And one more sign that our economy is actually stronger than many of us know or believe. I saw this Will Rogers quotation. I just had to share it because this is really what you allow us to do. We love what it is that we do. We believe very, very strongly in what it is we do. And that is the best way that I know to live a happy life and continue to go. Some days are easier than others. Some days have less challenges than others. But we will still get through to the end, and it is our honor to be able to do that with you as well. Some matter, some doesn't. My engineers like to call it signal and noise. I like to refer to it as news or noise. There are things that are coming out that matter. There's some that don't. We have to pay attention to the things that are impactful, that could change our portfolios. whether that be student debt issues that are coming, tax change policies that are coming, or things that are simply vibrating through the market. We will do our best to keep you informed of those and talk about them as often as we can. And we're always more than happy to have that conversation with you, whether it be myself, Adam, Jack. Feel free to call in, set up a review time. We are more than happy to have the conversation. If you're out and about on Saturday morning, don't forget to catch the radio show 9 to 10 on WQME. Sunday mornings 10 to 11 on Shine 99. And you can always get the newspaper column on our website at yourlifeafterwork.com. Happy to have you along. My friends, God bless. We look forward to seeing you again soon. Thank you for giving us the opportunity to serve. Have a great week. We'll see you again soon.